Hello, traders. Gary Wagner here. It is 12 noon in Honolulu, 5 o'clock in New York on a Friday. Happy Aloha Friday, as we say on the islands. It is the 8th day of December, 2023, and this is the Weekend Review. It was not a great week for gold bulls, with a strong daily decline as well as on the week. Gold basis, the most active February contract, has given up $24.50 today. That is a drawdown of 1.2% on the day, taking the most active February contract to $2,020.80. On a weekly basis, we can see that the drawdown was $70.90 or 3.39%. If you recall from last week's weekend review, we spoke about the fact that technical studies we have done indicated the potential that gold had hit a major super cycle top or a fifth wave top. Interestingly enough, we had a tremendous spike to the upside on Friday. And then Monday in Australia, we saw it go to a record high and sell off tremendously right after hitting that. First, I want to take a look at a weekly candlestick chart of gold futures. And what we can see is a simple two-day pattern, a dark cloud cover. The two strongest key reversal bearish patterns in simple candlestick patterns are the engulfing bearish and a dark cloud cover. The difference being in a dark cloud cover, it occurs after a defined uptrend where you get the most current red candle following a large green candle. It opens above the close, meaning it opens higher than it closed on the prior week on a weekly chart, and it closes at or below the midpoint. If it closes below the opening price and opens above the closing price of the prior candle, that is an engulfing bearish. So on the weekly chart, we did get a dark cloud cover, and when we look at the daily chart, you'll see that we got the other strong reversal pattern I mentioned, which is an engulfing bearish. We are looking at a daily candlestick chart of gold futures, the continuous futures contract. You can see the large spike up. This would have occurred on Friday. Again, daily candles, the all-time record high that comes in just above 2150. That occurred in Australia on Monday, and by the close of New York, we had gold down over $100 from the high at approximately $2,048. It is absolutely an engulfing bearish in terms of the candlestick patterns. It meets all the criteria, a defined uptrend, a strong move to the upside, followed by a open above the close of the prior candle and a close below the opening of the prior candle. You did get follow-through selling on Tuesday, which means you got a confirming candle. It did rise on Wednesday and Thursday, but these are tepid rises at best. And then today's further decline, giving us a total of just over $70 for the week in terms of a decline. It did fall right to our first potential support level. This support level mimics these tops right here. They came in around the end of October. I call that the October rally. Below that, you've got about 2010. And then here, this top comes in at approximately 2000. With the inflation report coming out on Tuesday and the Federal Reserve convening the final FOMC meeting of the year on Tuesday and concluding on Wednesday, depending on their decision, which is almost certainly going to be that the Fed maintains current rates where they are, does not initiate a rate cut or a rate hike. It will be interesting to see what gold does and how it reacts. For right now, when we look at this daily chart, we can see that the low came in at that second support level and closed just above the first support level at about 2020. Next, I do want to take a look at the dollar, because the dollar had strength this week. In fact, it traded higher 4 out of the 5 trading days. This daily chart showing Monday, Tuesday, and Wednesday had gains. Thursday, a strong decline, which was almost totally made up on today's advance, taking the dollar index to 104.02. We did see it come down over the last month and a half, but We are at about a 50% retracement from this last rally here. So we want to see if we are going to get a small clip up and a final move down. If that does occur, I would look for about 101 to be the area I would look for potential support in the dollar index. When we convert this chart from a candlestick chart to a Heikin Ashi, you'll see the kind of strength we have recently seen in the dollar index. And what we can see when we convert our candlestick to a Heikin Ashi is that the trend definitely was gaining steam, getting stronger up until yesterday's sell-off. And today, even though it had a recovery on our Heikin Ashi, it's looking as though we could see some sort of pivot to a move back to lower pricing. We have been looking at silver's sell-off all week. We noted that unlike gold, which attempted to recover on Wednesday and Thursday, the days that we saw tepid gains in gold, we had consistent lower lows, lower highs, and lower closes. That continued on to today. Yesterday, we talked about the fact that it opened, closed well below the 200-day moving average. The day before that, we talked about the fact that silver closed below its 200-day. Today, it opened above the 100-day, broke below that, broke below the short-term 50-day, and closed well below that at $23.27. On yesterday's show, we did say that if it broke through this point, we could find some support at the 50% retracement. We were incorrect on that assumption because there is no real support that comes into silver on a technical basis till about $23.18. That's the 61.8% fib retracement. The data set we use is the beginning of the October rally up to the highs that it hit, which is approximately $26.35.5. Lastly, I have converted our daily candlestick chart in silver to a daily 3-line break chart. As you know, the break charts are analogous to a Western point and figure chart in that they have specific criteria that has to be met before the next candle is formed, and it has to do with the comparison of higher highs or lower lows. In the case of silver, you can see that we've got a pivot candle, meaning the prediction is that it will move lower next week. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.